For this video, I want to do a example form 8936 for the clean vehicle tax credit, and this is going to be for the 2024 tax year. Now, in this example scenario, what we're going to have is a taxpayer who did the credit transfer election. So the taxpayer went to the dealer, they purchased the vehicle, and they signed over the credit to the dealer to reduce their purchase price. However, unfortunately, when they go to do their tax return, what they find is that the amount of income they earned during the year exceeded the relevant filing threshold, and so they have to repay the tax credit. So not a great scenario to be in, but this is unfortunately something that is happening. And so we'll go through the full Form 8936. It's part of the full return as well, so we'll cover all the schedules that you need. And then we do have some links to the IRS website to cover, this is the fueleconomy.gov website. So this is a great website to look up eligible vehicles that are available for the credit. So we'll search through this site for the vehicle credit. That's going to be in our example, and then a link to the IRS website for a number of Q&As on the clean vehicle credit, and they've updated it for this transfer election that you can do with the dealership. So if we start with the return, and I do have one slide here just covering some details on the fact pattern and then the credit itself. So the credit remains largely the same to what we saw last year in 2023. The big change is this credit transfer election. So if you have an eligible credit, you can go to your dealer, and at the time you're making the purchase, you could transfer the credit to the dealership to reduce your purchase price, and then the dealer will go ahead and get their money from the IRS. And so this helps basically, it does a couple of things. So one, it helps you save money initially, right? You don't have to purchase the vehicle and then wait until tax time to file your return and get the credit amount. And then it also makes up for taxpayers that don't have enough tax liability to be able to absorb the whole credit. So the credit, for example, if you get a $7,500 credit, if when you do your return you find out that you only owe, let's say, $5,000 in taxes, well, you can use the $7,500 to wipe out your $5,000 tax liability, but the excess, the $2,500 excess, is lost to you, right? It's not a refundable credit. You can't carry over the excess, so that piece is just lost. You don't get any benefit. With the transfer election, you get the full benefit of the credit, and if later it turns out you don't have enough taxes to absorb the whole thing, that's fine. There's no recapture. And there is a in the IRS page, there's a section that covers that in more detail, so we'll have a look at that. So the fact pattern for this example, we have Amy, taxpayer. She's a single filing taxpayer and projects that her income is going to be $140K for 2024. Now, her modified AGI in 2023 was $160,000. Now, why is this important? Well, when you compute the credit, if your income is above the relevant threshold, you can't use it, right? However, you get two shots at it. So you look at your income for the current year. If it's too high, that's fine. You can go back 1 year, and if your income in the prior year is below the relevant filing threshold, then you can still claim the credit. So you get 2 years, essentially 2 years, to be able to claim this credit from an income qualifying perspective. All right. Now, Amy purchased a new 2024 Blazer EV, which qualified for a $7,500 credit. And at the time of purchase, she was working with the dealership to go ahead and transfer this. So she didn't want to wait to do her taxes to claim this credit. She wanted it then and there, which is fine. So she transferred the credit pursuant to the transfer election, and that reduced her purchase price. Now, at the time of the purchase, Amy believed that her income was going to fall below the relevant filing thresholds, and she'd be able to qualify for the credit. Now, in December 2024, Amy received an unexpected bonus, so she got a Christmas bonus from her employer, and so it increased her W-2 income, and overall, this increased her AGI to above $150,000. In doing so, this made her ineligible for the credit. All right, so she has to repay it. this is just what happens, right? Changes happen over the course of the year, unexpected changes. And so under this circumstance, she's going to have to repay the credit. Now, at the time she claimed the transfer to the dealership, she was being honest. She made a good faith effort as to what her income would be. So she didn't lie to either the dealership or the IRS. It's just that later on during the course of the year, her income changed, and so she has more income, and that unfortunately made her ineligible for the credit. So she's going to have to repay it. So now let's go ahead and look at the return, and then we'll start digging into some of these numbers. So the clean vehicle credit, if we look at part 1 to start with, so we have modified adjusted gross income for both years. So the current period and then the prior period. So we've entered on line 1A or modified AGI from the 2024 tax year. So if I jump up to page 1 of the return really quickly, we can see down here her regular AGI is 150,584, and we don't have any other adjustments that are required to get it to modified AGI. Now, if we look at our 2023 return, we see that her AGI is $160,000. So we have the current year AGI, the prior year AGI, her filing status on line 5. So we've entered 1 for just line 1. Depending on what software you use, you might see S there for single filing. But we've indicated 1 for single filing status. And this is the key here, this table. So we can see here that in the Part 2 and Part 3 limits, so they're talking about your credit for business or investment use of a new clean vehicle or credit for personal use for a new clean vehicle. The limit, your modified AGI limit for a single filing taxpayer is $150,000, which means if either of these two amounts are above $150,000, or sorry, if both of them are, then you've got no chance at a credit at all. If one of them is above 150K and the other one's below it, then you qualify, right? Because you can use either the current year or you can elect to use your prior year income. But in Amy's case here, she exceeds it both years. So start of the form at page 1, we know we got to repay this. So now it's a matter of how do we create the rest of the form to figure out how much we got to repay. So credit for business or investment use. So we are, none of this vehicle was being used for investment or business purposes. It's only being used for personal use. And so for that reason, we're going to be completing this section covering credit for personal use part of a new clean vehicle. So the starting point before we come back to these sections is completing Schedule A. So Schedule A is where we input information on the vehicle that we bought, whether or not we transferred any credit to the dealer, and then a Q&A and a calculation of what the credit amount would be or how much we're going to have to pay back. All right, so if we start up in part 1, we've got, it's a 2024 Chevy Blazer EV. She's entered the VIN number up here, and then we've entered the date, place, and service. So this is the day that Amy went to the dealership, signed all the paperwork, paid, and then drove it off the lot. So February 1, 2024. Now, on question 4A, did we transfer the credit to the dealer at the time of the sale? So the answer is yes, we transferred $7,500 in credit. Now, all of this information should be available in the paperwork you get from the dealer. The dealer has to basically complete your paperwork and send it off to the IRS before they can authorize this transfer. So you're going to get receipts that show the seller transfer report that confirms that you were eligible to transfer the credit. The dealer verified it with the IRS, and then so you go ahead and complete this form to, again, mesh what's with the IRS in their system. So the vehicle that she purchased qualified for that $7,500 credit. So we've entered yes, and now moved on to line 4B. So if line 4A is yes, complete lines 8 or 13 as applicable, and then check the box here if they're directed to do so by either of those line items. So we're going to have to go down to lines 8 and 13, complete those. But before we do that, let's complete the rest of this section. So on line 5, does the VIN entered on 2 belong to a new clean vehicle placed into service during the year? The answer is yes. So we can skip to part 2. We don't have to do questions 6 and 7. So if we go down to part 2, it's labeled credit amount for business investment use part of vehicle. Now, the titling is a bit misleading because we're not using the vehicle for business or investment use, but even if you're only using it for personal use, you've got to complete this section anyway, because what they're doing is they want to see whether or not you actually qualify for it. And then at the end of part 2, they ask you, well, if you have any business or investment use, then we prorate the credit between the two items. But in this case, we're just going to complete the section above here. So we have 8A, did you resell the vehicle within 30 days of the placed in service date shown on line 3? And the answer is no, right? We haven't bought this for resale. We didn't buy it and immediately just say we didn't like it. So in our case, no, we didn't buy it just to resell it within 30 days. So go down to line 8B, are you filing this form with an individual income tax return? And the answer is yes, we're filing this with our Form 1040. So we can go down to line 8C. Now here's the test for whether or not our income is too high, okay? So line 8C, complete 8936, lines 1 and 2. Is line 2 more than the part 2-3 limits amount shown in the chart? Okay, so that's the first question. So what we've done is we have completed lines 1. So our current year modified AGI, and the question they're asking is this amount greater than the applicable amount in the chart? Well, 150,584 is greater than the 150,000 part 2, part 3 limit for a single filing taxpayer. All right, so we go back down to 8C, we've answered yes. Now, because we've failed the test for year 1, all right, our income's too high in year 1, right? So we're going to have to go back and see, well, if we look at our 2023 income, do we meet the income test? So we're going to answer yes, go down to line 8D. Now on line 8D, it's asking complete lines 3, 4, and 5, and asking is line 4 more than the part 2, part 3 limit shown in the chart below? Line 5 for the 2023 filing status. All right. So if we go back up, I mean, we already know the answer, right? So 160,000 is our income from 2023. So that's greater than the 150. So we failed the test again. All right. This is why we have to repay the credit. So we answer yes. And then it lets us know very nicely that we have to stop here. We cannot claim a clean vehicle credit for this vehicle. If line 4A is yes, meaning did we transfer the credit to the dealer, check the box on line 4B and report the amount from 4A on Schedule 2, Form 1040, line 1B. All right, so if we go back up here, as it's asking us, we've checked box 4B, and because we don't qualify for the credit, but we did transfer it already under the assumption that we would qualify, we have to recapture this as a tax. And what's really what's really tough pill to swallow is this is not a recap. It's not income. We're not including it as income. It's tax. All right. It's being added as our taxable as a tax liability on our return. So if we go back to Schedule 2, so we've got the 7,500. So Schedule 2, additional taxes, Part 1, Line 1B, repayment of the new clean vehicle credit that was transferred to a registered dealer from Schedule A, Part 2. There's our $7,500 figure. And if you complete the rest of Schedule 2, if you have any other items that might apply, go ahead and get them entered in there. In our case, that's the only item that Amy's got. So, well, we'll see that item again is back up on page 2 of the Form 1040. We can see here her taxable income was $135,984. The amount of tax she owed on that was $25,653. And then the amount from Schedule 2 was $7,500, right? So that is in addition to the tax that she owes there of $25,653. So $33,153 a tax. She's got a $2 credit there from something, maybe a foreign tax credit. So the total taxes owed is $33,151, and a substantial portion of that is a repayment of that clean vehicle credit. Now, so that covers the forms. I want to touch on as well these FAQs here. Actually, sorry, let me look at this form. So this is a very helpful website, fueleconomy.gov. It has a lot of information, but one of the things it does have that's very helpful in this case is it has a system of searching for eligible vehicles that are that qualify for the tax credit. So the interface is pretty easy, right? You're just picking what time period did you place the vehicle in service, so when did you actually take delivery of it. So if we're working with the 2024 tax year, let's say, you look up the model of the vehicle. So recall that we're working with a 2024 Chevy. So we're looking at 2024 Chevys here. And then if we get a list of all of the available models, we can see that there's that Blazer that Amy purchased. The Equinox EV is also available for the credit. And then it does have a nice little notation there on checking with your dealer for eligibility. You just want to make sure that the dealer doesn't have variations of these vehicles that they're selling you that otherwise wouldn't be eligible. But at least as a starting point, you could see that these models are intended to qualify for the vehicle. You just have to talk to your dealership and do a little more due diligence just to make sure that it does in fact qualify. Now, very last thing before we wrap up here, I want to talk about the IRS FAQs. So this is a list of, I think it's 30. I think it's 30 FAQs on a variety of topics. Now, I won't bore you with going through every single one. I'll put a link below in the description for this so you can go check it out yourself. But if we're just touching on some of the main ones that are really relevant. So we talked about this earlier, right? What if the buyer has insufficient liability to fully use a transfer credit, right? So this goes back to that issue of if you've got a $7,500 credit when you do your return, what if your tax liability is only $3,000? Well, you can use the $7,500 against the $3,000, but the extra $4,500 just gets lost, so you have no real benefit from that. That's been an issue from 2023 and going back prior years. What they're letting you know here is that if the amount of the credit that the electing taxpayer elects to transfer to the eligible entity exceeds the electing taxpayer's regular tax liability for the year in which the sale occurs, the excess, if any, is not subject to recapture from either the dealer or the buyer. So what they're letting you know there is if I go into a dealership, I buy a vehicle and I transfer the full $7,500. Okay, I've got the benefit, the economic benefit of $7,500 reduced purchase price. If I later go to do my tax return and I only owe, let's say, $4,000 in taxes, so my $7,500 credit, if I didn't transfer it, if I just did it on my return myself, I would only be able to use $4,000 of it. The extra $3,500 I would lose altogether. It would provide no benefit to me. So what they're saying here is if that's your situation with a transfer, that's okay. The extra $3,500, you basically can keep it. You won, right? That you beat out the IRS this time because you don't have to repay the extra credit that was already transferred to the dealer, and the dealer doesn't have to repay it either, right? That's also really important to remember. All right, a couple more here. So question 6, what information do I need to provide to the dealer and when? So if you go into the dealer, they're going to ask for obviously your information to do the paperwork, but you're going to need to provide your social security number. You're going to need to provide a photo ID. And then the key point here is an attestation from you about your income. So the dealer needs to let you know what these income limitations are going to be. They're going to need to let you know that if you're a single filer and your adjusted gross income is over 150 grand, you're not going to be able to get this credit. And so they ask you, look at your prior year return. Did you make less than 150K or more? Okay, if you don't qualify using that year, what about the current year? In the current year, are you going to make more or less than $150,000? If it's going to be more, then you're not going to be eligible for this credit, right? So you shouldn't be doing a transfer. So they're going to ask you that. Obviously, be honest. Don't lie. But if you're honest and you think you're under the limit, and then like we saw in the example that we just had, your circumstances change, well, then you have to repay it, right? You've got to do the 8936 and repay the credit, and that's the end of it. All right, so what are some other key ones? Oh yeah, this is a good one. Can I transfer part of the credit, right? Some people try to do this, or they ask if they can do this, and the answer is no, right? Whatever credit amount applies to that vehicle, you got to transfer the whole thing, or nothing. Again, you can waive the election to transfer it. You can just pay the dealership the full purchase price, whatever price you negotiated, and then you can later go ahead and do your return and claim the credit using the 8936. And then the very last question, which is unfortunately what happened to our taxpayer. What if I end up exceeding the modified AGI limits for the year? And the short answer, nice one little sentence. If your modified AGI exceeds the limits for the tax year, you will be required to repay the amount received for transferring the tax credit as an addition to tax for the tax year the vehicle was placed into service. Right? And there it is. So that's the problem we had with our taxpayer. Not a great outcome, but these are the rules. So what are you going to do? Okay, so that covers it for this video. I hope that was helpful. If you have any other questions, feel free to comment below. Happy to answer what I can. And as always, I appreciate you watching, and I do look forward to seeing you on the next video. Thank you.